And so generally, when we talk about planning in your business, Adam, I'm talking with Adam Chapralis, and if you're just joining us, 508-771-8900 is the number. We're talking about long-term care and long-term care insurance. So in your experience, Adam, in your business, you're often talking about risk management. That's part of what we think about as part of the financial planning process. And so a better way to do this generally than relying on becoming poor and impoverished is to provide a way to mitigate the risk, maybe not even entirely eliminate the risk, but at least manage the risk through insurance. Don't you agree?
Absolutely, and you got to understand what the fundamentals of insurance is. It's transferring the risk from yourself over to the insurance company, by paying a premium to do so. And I think long-term care, and one of the things that we didn't talk about, Chris, which I talk to a lot of people, is when you sit down with someone and they're working with a asset management advisor, and they have all of their assets, and let's say they have $400,000 or $500,000 and they're growing it and they're doing a great job, and they say, well, I'm really all set, I got my assets. The number one thing that I think, if you have assets, or as an asset manager, and that's one of the things that I try to talk about, because I have a lot of friends like yourself that are in the business, is listen, if you're going to help grow someone's assets, don't help grow their assets to give it to the nursing home. Help grow their assets so they can spread their wealth down to their family, because
I'm in agreement with you. A lot of times people will say, I can self-insure. I can cover it. And no, I mean, it's viable for some people of a very sizable estate. You may be able to do that. But why would you? You could self-insure your house as well. But why would you? You know what I mean? You might have, let's say someone has wealth of a couple $1 million, and let's just say $500,000 or $750,000 of that is their house. Well, they could afford to replace the house if it burned down with the money they have in investment. But why would you? Right? It just isn't worth the while. You pay for that homeowner's insurance over 40, 50, 60 years, right? Why not look at, or more, why not look at an insurance policy over 20 or so years as a way to manage the costs, which are comparable potentially to the cost of a house, in some instances, by using insurance as the way to manage that risk.
The other thing too is you got to look at,
and maybe even higher statistics of needing it.
Well, the other thing too, you got to look at what it does, and it's not so much of a thing where you have to have it. It's an emotional thing, and it really hits people by the heart, because if you look at the psyche of someone when they evolve, when people are in their 20s, their main thing is going to school and then starting to build their assets. Then in their 30s, they're concerned about having their family and putting their kids through college. Then in their 50s, they're concerned about retiring, and then their 70s, they're enjoying their golden years. And then when they're in their 80s, you got to understand what's going through someone's mind. They're not thinking about how much money they've saved. They're thinking about, how can I be remembered, and how can my family remember me?
They want to preserve.
They want to preserve that. And you don't want to be 80 years old and say, geez, I did such a great job preserving all this, and now it's going to go to the nursing home. You want to say, geez, do I want to do what I really want to do and be able to give this to my grandkids or my family and be remembered as that person that did all this stuff? And that's really the power of what long-term care can do, is it helps with the emotional tie that a lot of people don't think about. And that's extremely, extremely important. You can't put a price tag on that
that's a good point.
When you hit that area.
All right, so when we talk about long-term care insurance, there's some basic ingredients that go into it. And if you want to join the conversation, 508-771-8900 is the number. So basic ingredients, why don't I just list them off, and then maybe you can explain what they are. So generally, there's either a daily or monthly benefit. So I have to buy an amount of insurance that is also affected by how long of a policy I'm getting. So a duration, and the duration is essentially the minimum it'll last, right? An elimination period or deductible, and then an inflation component.